All right. Hey guys, welcome to this course on value investing. And in this course, we are going to go in depth and show you exactly how we pick our stocks, exactly what we do in our valuation, how do we value the stocks, and really, kind of how you can go about doing the same thing all by yourself without any of our help. All right. Now, this course is going to take you from beginner to advanced, and this is not just any course. We're going to go in depth, and this is really all about how Warren Buffett does his investing, and we really attribute this course to basically it comes from those books that Warren Buffett really loves that his professor wrote, and there are two books really. I'll talk about them later, but this is the value investing course, and we are going to begin now. All right, so what is value investing? First off, what is value trading? Let's first look at that. All right, we want to get the difference between trading and investing. Let's say that value trading is something in which basically what you do is you kind of, well, let's say I bought a pen today for $1 and I sell it tomorrow for $2. That is value trading. All right, now what is value investing, and really what is the difference between value trading and value investing? We want to get that first. All right, so because this is so important, once you understand this, you'll be able to understand what is an asset, what is a liability, and really how do you go about buying the right stocks. All right, so basically what I did was I bought a pen, I sold it for double price. All right, and this is value trading. So the value of the pen never really increased. All right, the value of the pen was the same. It was bought for $1, but someone just needed it the next day, and I saw the need and I sold it for $2. All right, so that was the whole concept, but the value of the pen remained the same throughout its lifetime. All right, now it may have degraded, but in one day didn't degrade all that much. So what is value investing on the other hand? Well, value investing is something in which you accumulate assets. All right, so what do you really mean by accumulation of assets? For that, we need to understand what is an asset. See, an asset is something that continues to put money into your pocket every single month or every single year, whatever it is. All right, so an asset is basically growing in value continuously. It's not something that is remaining the same. Its value is never remaining the same. It's the same. It's not like the pen that the value was again just $1, but I sold it for $2 because the next day maybe someone needed it and it was an urgency, and the value just kind of rose because of that, but the value of the pen remained the same. But instead here, if we look at value investing, let me give you some examples. It's about all asset accumulation. All right, so let me give you some examples. Let's say over here you have a house. All right, now the house may grow in price due to inflation, but some people think that the house is an asset, but I would argue that it is not, because let's say you have a house, you have a house, you're living in it, and you think that the value of that house grows just because of the inflation in the currency that you basically use in your country. That's not true at all. That is not an asset. All right, your house is not an asset. However, if you have a multi-family home, let's just consider this as a multi-family home. Let's say that there are three families living in here, and all three of those are paying rent to you every single month. So that is an asset, because that is putting money in your pocket every single month. All right, and the value of this asset keeps on rising. You know that rents keep on rising. Again, that is probably due to inflation, but here we are looking at the deeper concept. Here it will keep on putting money into your pocket. That is what asset is. All right, an asset is. But however, that doesn't happen with the value trading concept. All right, when you're buying a pen, you can sell it only once and you can probably increase the price, but the value of the pen never really increase. All right, so this is the difference between value investing, value trading. We got that. We also got the meaning of an asset, something that continues to grow every single month, puts money into your pocket. All right, and let's say that you have a truck like this. All right, this truck is also an asset if you have it. Let's say you this is a business. All right, you buy this truck, you hire someone to do the deliveries or whatever they are doing every single month. Let's say he completes 20-25 deliveries, whatever it is, it continues to put money in your pocket. Of course, you're paying him a salary, that's good enough, but again, you are gaining some money on top of that. So this truck was your investment, and this truck is really an asset which is going to complete the deliveries with the help of a person that you're going to hire, a driver most probably, and that's it basically. All right, so this is again a great example of an asset. Let's say you have a refrigerator over here, and let's say that some part inside the refrigerator, you have patent on that part. All right, so a patent means that basically for the next 10-20 years, whatever the time frame is, no company can use that part without actually, basically they will only buy it from you. All right, so they cannot manufacture that part on their own. If your company has a patent for it, basically your they will have to buy it for your company only. All right, so if they buy it from your company, of course they will have to kind of put in the product in every single piece that they are building. So every time someone buys the product from them, they basically put some money into your pocket as well. All right, so again, this can be a great asset as well. So these are the examples of the assets. Now we move on to liabilities. So what is a liability? This car over here, this is a liability, first thing. All right, now why is a car a liability? Because it's going to take money out of your pocket every single month. All right, now how does it do that? Well, it does that by basically, you already know, you're paying for gas, you're paying for maintenance, and you're also paying for insurance. That comes up to about, let's say, about $500 per month. Well, that is a huge liability. This is the best example of a liability, and I would probably use it again in the future as well, in this video maybe. All right, so the car can also be a liability, and basically even a house, just don't think of a house as a house as an asset. All right, because it's not an asset. If you're staying in it, the value is only increasing because of inflation, but it's not like it's continuing to put money in your pocket every single month. So that's why multifamily homes are usually considered assets, while a house in which you are living, that's really not an asset. Right, so now we just want to compare assets versus liabilities, and then we wanna talk about how the wealthy kind of invest. All right, so first, assets versus liabilities. Over here you can see on the left you have an asset that is a multi-family home, 3 families living in there, putting money into your pocket every single month. On the right you have a liability, that's a car, taking out $500 out of your pocket every single month. So you want to accumulate as many assets as you can. That's how the wealthy invest. All right, what they do is they kind of try to put in money into more and more assets, and they want to make more and more investments so that they can accumulate more and more assets. All right, so those assets will kind of try to put money back into their pockets every single month, and that is what is important in this case. All right, this is the difference between the wealthy and the not so wealthy, or the middle class as you would like to call it. All right, and even when the wealthy are investing, they would of course they would need to buy a car too. Of course, they are only human, so they would do that, but they would use that money that comes in from the assets every single month. That money comes in, they would use that to kind of pay for their liabilities, and that's really the whole definition of financial freedom. They are investing, making more and more assets, and using those to pay for the liabilities in their lives. All right, so this is really important that you understand this. Now let us move on to, let's say, people who are not really very wealthy, and what they do is they accumulate liabilities, and they have only one asset, and that is their job. Of course, their job puts in more and more money every single month into their pocket, but that is just one asset on their profile, on their basically they have nothing else that continues to put money into their pocket every single month. All right, so a lot of people like that I know personally also. I'm sure you know them as well. So if you are someone who has just their job that is putting in money into their pockets, this course is for you, because this course will teach you how to accumulate assets. This course will teach you exactly how Warren Buffett uses his investing strategy, and really how to actually put more and more money into your pocket every single month. All right, now these people who are really not very financially educated, what they do is they have just one job that's putting in money into their pocket, and even that money goes out when they spend it trying to buy more and more liabilities. They want validation from other people, they want more and more cars, they want more and more expensive phones and all of that stuff that just takes money out of their pocket every single month. So they are doing the complete opposite over here. You can see they are accumulating liabilities. They don't have any assets. The only asset is their job, and what they're accumulating is just a couple of liabilities. All right, so you can see the trend over here, right? This is why this is the difference. Now, how do you value invest like Warren Buffett? What's his investing strategy, and what are we going to learn in this course? All right, so let's go over that. See, how he does invest is actually very different from a lot of people. But what a lot of people do is they would go on to Google, they would go on to their broker's website, they would just go on, search for the share, and check for the stock price, and then they would decide, all right, I don't know, maybe I want to buy the share because I think that the technical analysis tells me that it's going to go up, or the technical analysis tells me that it's going to go down through, so I'm going to short it. So that's not how Warren Buffett invests. All right, usually what he does is, let's say he likes a business. On the top left you can see that there's a business, let's say it's listed on the stock market. All right, it's in the food industry and it's listed on the stock market. So what he's going to do, he's going to actually go on check the financials of the company. Now he does a lot of homework. It's not an easy task. A lot of people do not understand this, but what he's going to do is, and here's the secret formula. All right, what he's doing is that he's not just checking the share price. He's doing everything but checking the share price. He's going to calculate the share price from the company's financials, from the balance sheet of the company, from the cash flow statement, from the all of these income statement. All of these things. He just kind of tries and make sense of that data, and that's how he will evaluate them. I don't want to go too deep in this chapter, but this is what the whole course is about. We'll really understand how you actually go through this process and evaluate the stocks on your own, just like he does. All right, so he's going to calculate the share price. Let's say that after he calculated the share price, it comes out to be $40. Let's say that, $40, that's what he thinks that the share price should be. Now he's going to go on to the stock market. All right, now he's going to go on, check. This is where most people really start, but he's already done his homework. Now he checks the share price and he sees that it's selling for only about $30 per share. All right, now he calculated the stock price as 40. The current price is 30, so he's gonna make, let's say, $10 on every $30, right? So every $30 he invests in this stock, he's gonna make $10. That's about 33% he's gonna gain on every single stock that he buys. So this is how he really invests. Now, where did Warren Buffett learn his value investing technique, and how does he do all of this? Well, he had a mentor, of course. All right, and his mentor was actually Benjamin Graham from, he was a professor at Columbia University, Columbia Business School, and basically he wrote two books where Warren Buffett gets most of his knowledge from about value investing. The first is, of course, The Intelligent Investor, which is probably the best book that has ever been written on investing. And the second is Security Analysis. Of course, these books, if you actually try to read them, if you have tried to read them and you are just beginning out there, even if you have, let's say, 2-3 years of experience in the stock market, it's not going to be easy to understand these books. And that is where we come in, because they are very high level, and it's just not easy for someone who doesn't belong to this field or who hasn't really researched in this field to understand these books. All right, so this is where we come in. We're going to break down the concepts for you, break down exactly what the investing strategies are, and teach you how you can also do the same kind of investing techniques, use the same techniques, and get the similar kind of returns as Warren Buffett does. Now, I'm really excited for this course. I want to offer you, let's say, the first 3 videos at least for free. I want to make sure that you guys know what you're getting yourself into, because next lesson itself, we're going to dive deep into you're going to feel the difference. You're going to understand the in-depth concepts and everything. All right, so we're going to do that from the next lesson itself. We're not wasting any more time over here, and let's see you in the next video. I hope you watch it. Trust me, you will appreciate that you watched it. It's one of the greatest things I have ever built, this course. All right, I'll see you in the next video.